Snipers, you have to see what's happening to the Bitcoin price today as the Trick, Trap, and Frustrate crew have clocked into their shift exactly on time right before the weekend where the cryptocurrency market is the most manipulated. Due to CME futures markets being closed, we are seeing a rejection of 34,788 back inside of the range of 35,000 and 24,000 US dollars, with our only hope in sight at 26,000 US dollars to see further volume. I want to talk about what we're walking into when it comes to the weekend where the cryptocurrency market is the most manipulated, because there are already footprints of the Trick, Trap, and Frustrate crew right now on the chart. Notice how the initial test of 34,788, not a coincidence. You get this bullish tail, this bullish hourly candle, and within 1 hour, the next candle, bearish tail, rejection of the weekly open, bearish body here, and then we continue down, right? Trick, Trap, and Frustrate crew, back-to-back candles here, full effect coming into the weekend. I want to talk about what we're going to be watching now, because to be quite honest with you, throughout this consolidation that Bitcoin has had, we have had an immense amount of long and short opportunities. And when Bitcoin initially tested 30,000, for those in our Discord, I sent out my swing trade. We entered in at 30,900 on the 19th of May, a swing trade for Bitcoin, low risk. Within 24 hours, we saw 30% upside on that trade. That's how you enter a swing trade. And since that day, all we've done is long and short altcoins and Bitcoin, and we've had an immense month of great trades, and a lot of opportunity has been squeezed out of this consolidation period. But the Trick, Trap, and Frustrate crew will always get the last laugh. And I'm here today for you snipers to prevent you from tripping at the last mile. So remember, as we talk about today's analysis, the $35,000 level and $24,000 level is a range. And I've said this for the last month. When we're playing a game inside of a range this large, it's a dangerous game to play. And so, to me, what's happening is extremely entertaining, because when it comes to the downside scenario, and then I'm going to get into the upside scenario, we'll talk about altcoins, because we're also seeing a shift in capital from coins that are less fundamentally sound into coins that are more fundamentally sound, like Cardano, right? And we're seeing strength with those altcoins. I'm going to talk about that and the reallocation I'm expecting in the market when it comes to where the capital is really going to flow. But for the downside scenario on Bitcoin at this point, since I've already got my long-term entry at that $30,900 level, I got that on the 19th of May. For those in the Discord, you got it too. I'm cool with that. If Bitcoin comes down at this point, here's what I'm waiting for. There has to be a high volume move. And at this point, there's only really going to be volume at this $25,880 level. And then, of course, the $23,795 level, the $24,000 level, whatever analysts that you guys watch, they're all saying that's going to be the potential bottom. And then, of course, we all know the previous all-time high, the $20,000 gap here between 24,000 and 20,000 is also on the table. If you're tuned into the Cypress channel, we don't just give you one scenario. We give you the least severe scenario and the most severe scenario. And so if we're going to see further downside, I'm totally fine with that. We've already taken part in this consolidation. We've had a blast. And at this point, we've seen the symmetrical triangle fail once. We had a bull trap, broke out of resistance, failed, right? And then we saw the bear trap, broke down, failed. Then we saw another bull trap, and then a bear trap, and then we came out, broke out of the larger triangle, failed. So at this point, we've played our cards. The cards in our hands are running out. We have to be aware of that as traders. We're testing this level a fourth time now. The more you knock on a door, the more likely it is to break. Heading into a weekend, here's what I'm watching for the downside. If I'm going to be entering into a long position, I want to see high volume. And the reason I say that is I'm also aware of the fact that on the 6-hour chart, institutions we're willing to show that there's a lot of volume below 30,000. And you can see on the recent dip down to test that $30,000 to $28,000 range, we saw more volume come in. But the institutions this time said on the 4-hour chart, we don't mind imprinting this. And for those that watched our video yesterday and the week before, I've been talking about what institutions like to do. They don't imprint themselves on certain time frames that are more popular, like the 240-minute chart or the 4-hour chart. And so initially, they made it seem like there was a lot of sell pressure. Nobody knew there were buyers. Now people know there are buyers. Is this the Trick, Trap, and Frustrate crew coming in, doing what they usually do? Traders think that this is where the volume's at. They enter into their positions. They think this is it. And then they pull the rug. That's on the table for the weekend. And I'm only going to enter a position if we see high volume, because here's the thing. We know there's volume under this level at 30,000. And so therefore, in order for a real move to occur, we're going to have to see a lot of sell volume come in and breach this level. And I think since we've already seen the consolidation, we're going to see another transitionary phase. And if you don't know what a transitionary phase, for those that are new to the channel, it's when we're seeing the real transitions in price, right? And so you never want to be caught in a trade here. Of course, if you have a short open or a long open during these moves that you've already taken profits on, but you've held a smaller position, that's when these moves come in handy, because it really starts to pump those profits up that you just kind of held at break even, right? So for the downside scenario, I'm not going to be fooled. If we're staying below 35,000, I'm waiting for high volume to come in. I'm waiting to see the next 4-hour push, the real Trick, Trap, and Frustrate crew coming in on a popular chart where people think there's volume here. Then they bring it down one more with volume. And that volume, of course, we know there's a lot of upside pressure here. That would typically result in a wick. And so am I saying that I'm only expecting a wick? Absolutely. I don't think that we're going to come down to the $26,000 level without a lot of volume and a lot of price action. And so this is where I'm going to be watching for those entries, right? But when it comes to the upside, here's what I like about this, and this is why it's entertaining to me. I'll just wait for 34,788. If they want to play below this range, I'm totally fine with that. I'm not going to get fooled here, right? And so I want to talk about what to watch for to get a confirmation of this move that we're talking about right now, because so far we're at the $32,000 support. You know, of course, we're going to see a 4-hour candle, test it, and then it's going to probably come back up and test it again, right? So we don't know how long this is going to elongate. I'm going to talk about that, but then we'll have to discuss what's happening to altcoins, of course, because we're also seeing a shift in capital when it comes to altcoins, because notice how this Ethereum to Bitcoin chart on the 1 minute is showing signs of accumulation with an institutional type of capital. Look, these large buy orders just coming in without sell orders that are really adding up. You know, yeah, we had one push of sell, but then look at all this buy pressure that came in. So it's obvious to us right now that people are exchanging a lot of their Bitcoin for Ethereum. You know, and this is a 1 minute chart, so of course you're going to see a lot of high and low volume moves, but there's certainly a transition occurring. And for the Ethereum to Bitcoin chart, we've been waiting for a strong opportunity to get a nice long position in, with this Ethereum to Bitcoin chart forming this bullish flag, about to come and test this $53,500 Satoshi area where we could wick just below that. Is that a prime opportunity to get into Ethereum before Ethereum 2.0 comes out and it switches to proof of stake, no more energy concerns, DeFi is already built on Ethereum? I don't know. We're not going to talk about a flippening on this channel. We don't need to open that door. But what I am talking about is, are we going to see the fundamentally sound altcoins like Cardano and Ethereum see more bullish momentum if Bitcoin does see this next push to the downside and an immediate push back up? We want to monitor some of these altcoins. So I'm monitoring this Ethereum chart, and when it comes to Ethereum US dollar price and the correlation, I wouldn't mind any entries now below 1760 and down to 1440. That's another range we have here. And percentage-wise, we're looking at a almost 20% range there of some nice possible entries in Ethereum if we start to see some downside in Bitcoin. So I want to talk about this. We're going to look at the total cryptocurrency market cap chart, and then The week is closing, of course. We're heading into a very manipulated time in the cryptocurrency markets because of the traditional markets being closed. We have to address how the traditional markets are closing, because the environment in traditional markets are actually doing very well on a Friday. Heading into a cryptocurrency weekend, it's exactly what I want to see: stability and control. And so we'll talk about that. You guys are watching the Sniper channel. My name is Naeem Al-Abeidi. Remember to smash the like button for the YouTube algorithm. I want to first talk about this Bitcoin scenario and the confirmations we're going to be looking for. So far in the hourly chart, we could expect Bitcoin to have a cup of coffee below 34,788 and around the $32,000 range, right? So there's obviously going to be some consolidation here, but what we're really waiting for is the next volume move. And at this point, if it comes to the downside, I believe that the $25,880 level is going to be the first area where we'll start to see the door open for more volume. And if we're only going to push further down, it's going to have to be a fast move, I think. So I think there's going to be a lot of pressure built between this $20,000 range to the $24,000 range. And if we see a downside move, this could be a very nice place to be entering into altcoins like Ethereum, Cardano, of course, entering into your Bitcoin positions. If we start to see movement back up to 34,788, then we just need to get above it. And if we get above it, we can get above the weekly open at 35,600, as I talked about yesterday, then things start to become a lot calmer. But every time we reject and come back down, that's when we're starting to see the fear in the market, right? So we need to start addressing what's happening here, but don't get fooled on the last mile, snipers. We know 34,788 and 24,000 is a very big range. Don't get trapped in this range. Really, I want to stress that. And so when it comes to altcoins, understand that when Bitcoin is moving in US dollar value, what's also moving in value is the US dollar value of one Satoshi. And so you're also valuing a Satoshi based on what Bitcoin is moving in, but then altcoins are also valued in Satoshis. And so there's this complex relationship where we can see where capital is moving. And so far in the overall market, it looks like we're going to see a death cross with this total market cap chart. We are below the 200-day moving average. So that indicates that it's a very sensitive altcoin market right now. And you have to be careful at which altcoins you're trading and holding, because with others' dominance, it's still holding the 12.2% dominance level. It's having a cup of coffee. So it's either going to break down or see a bounce. And so until this happens, I think staying in fundamentally sound altcoins, regardless of where this move goes, is going to be your best bet. And so that's what I'm looking for here. With Bitcoin dominance, we're seeing less fear, but we're still trending up slowly. And so a 50% dominance test where the weekly open will have confluence soon, I think is going to be highly likely, right? So we're going to monitor that, but it all is going to depend on what Bitcoin does. That's the big mover in the market. And so when it comes to how traditional markets are looking heading into the weekend, I want to just quickly address this. The DXY doing exactly what we want. Japanese markets back above the monthly open and weekly open. The CSI 300 above the weekly open, below the monthly open, but still a very bullish continuation candle today, up 1.6%. And then China, you can see they're shutting all these miners down. Traditional markets in China, I guess, are starting to get capital back in their markets because we're here testing the monthly open, looking like next week we can see continuation, possibly new highs here for the year. Traditional markets don't look bad. It's exactly the environment we want to assume that Bitcoin is going to be obedient to our support levels, our resistance levels, and its price action. And so it's all about the outside environment being calm. That allows Bitcoin to be obedient. But when the outside market is not calm, Bitcoin is not obedient. And that's where you see those transitions, right? So are we going to see a transition this weekend? Or are we just going to see a lot of tests of 34,788 and 32,000? Who knows? It's all on the table. But if you're watching the Snipers channel, we know that we're not going to get fooled between 35,000 and 24,000. If we're going to come down, then let it come down. Wait for the volume. Be patient. As Warren Buffett says, money moves from the impatient to the patient. And with that, thank you all for tuning into the Snipers channel today. If you want to win Principles by Ray Dalio, one of my favorite books on value investing, comment below, share this video. You'll have a chance to win. And I'll pick a winner from our video yesterday, and we'll wrap up this video here. Let's see. Mr. Money Matrix says, yo, I think he was the first comment yesterday. You want to book, send me a message on Instagram. And with that, thank you all for tuning in. Be careful on the weekend. The Trick, Trap, and Frustrate crew are in full effect. And we know that because of this hourly candle. So if I'm going to leave you with a puzzle piece, it's going to be how to identify the Trick, Trap, and Frustrate crew are clocked into their shift. When you start to see these type of hourly candles, bullish, bearish, back to back, that's when you know the Trick, Trap, and Frustrate crew are in the markets. Thank you all for watching. Snipers